Good afternoon, Blue Line traders. I'm Sean with Blue Line Trading, and this is your daily market update for January 24th of 2023. Starting with the market overview, we are starting on the S&P futures chart on a 15-minute time frame, and I've got your close from yesterday marked right here. When we follow the median line, which is in red right here, you'll notice that the first half of the overnight session was very well balanced as the price action hugged the median line. And then at about 12 a.m. last night, sellers started to get aggressive. And the high was put in at about 9:30 p.m. last night, which means that once sellers got aggressive, the momentum coming into today's open was in the direction of the sellers, giving them the upper hand. Now, we did open out of balance somewhat to the downside today, and that was because in the second half, sellers got pretty aggressive and they put in the low just before today's open. We opened on this print right here, and we traded in this range for about an hour, at which point sellers put in one more low right here, and then the price started to climb. We got an inventory correction, which brought us up to the median line, where we found resistance and played around there all the way into today's close. Now, we did close towards the top of the range, but you'll notice that there was no conviction from either the buyers nor the sellers today, which means that we had an inside bar. And this high that we put in on the closing print was a new lower high, which is bearish and would tell us that we are pulling back. And that is exactly what happened after the close. We're currently trading near the overnight low towards the bottom of today's range in tonight's overnight market. The big question of the day is going to be a little bit different than in the morning update. And that is, are we still looking for only a shallow pullback towards the 39.70 zone, possibly as low as 39.30, or should we be looking at 38.50 or lower? Then, once that pullback is completed, where should we be looking for the next target to the upside? And to answer that, we're going to look at all the evidence that's available to us. Starting with the price action, we're going to start with the overnight price action in the green box. It's bearish. And the reason it's bearish is yesterday we continued to rally and we put in this high right here. Pulling back from this high, we came back up and the overnight high did not take out the previous high. So that brings into question, is this trend coming up over? And from this point, we confirmed that it was because we came down and broke this low. That is the definition of a downtrend. Now, moving on to the daily session price action, it's also bearish. And the reason it's bearish, even though the opening prints are the lows and the closing prints are the highs, this high does not take out the previous high. So that again is the definition of a downtrend. And we are confirming that it is a downtrend, at least short term, because we're pulling back into tonight's overnight market. Coming down to the intraday volume, you'll notice that it is dense with buying bars, which means that buyers did have good control today. But my guess is a lot of that has to do with the fact that we're seeing some rotation into tech for earnings. When we pull up the session-based volume profile, you'll see that we had an engulfed value area and a lower point of control, with the profile shape being a somewhat messy D shape, which tells us that there is a potential here for continuation to the downside, and that is what we had forecasted yesterday. Coming over to the daily time frame to look at our daily candlestick location and structure, we are looking at this candle right here. That's today's candle. It's bearish as far as location goes because we're at the top of a trend and we have an indecision candlestick up at resistance, and the structure is bearish as well, as this creates a reversal pattern, and that looks like it's possibly playing out in tonight's overnight market as we have this bearish candle coming down, and this is, as of right now, a bearish engulfing candle. When we come down to the daily volume, you'll notice that it is lower, which means that it doesn't really show conviction to the downside just yet. We're going to be looking tomorrow at the volume to see how it looks. If we get high volume tomorrow, it means that we could be coming down further, but if we have weak volume, as the price is coming down, it would tell us that this whole movement is probably corrective and we're going to come right back up, and there is going to be a more direct path towards the 4,300 zone. Also, just want to point out, yesterday we had marked this resistance, possible bearish divergence forming on the daily, and it did play out today, and now the RSI is pointed in the downward direction with the overnight candle being a bearish engulfing candle. So that does tell us that we're probably going to be pulling back here. Moving over to the market internals, starting with the VOLD, you'll notice that we chopped sideways for the majority of the day, which means that there was a battle for control taking place. And as we pointed out yesterday, the ongoing theme with shifts in control being centered around volume, look at this taking place. This was very predictable because we looked at the patterns that we've been seeing in the market recently. There is a shift in control taking place, which means that we're probably going to see more of a pullback tomorrow. Coming down to the ADD, the market breadth to the upside was actually pretty healthy today. We opened right here on the SPY and then pushed up, and we opened right here on the ADD and pushed up a lot, which tells us that yes, we were out of balance to the downside a little bit at the open, but ultimately there is some interest in getting bullish on this market with retail buyers and possibly even dealers, which means that this pullback that we're seeing is probably going to be somewhat short-lived, and I'm thinking it's going to be towards the 39.70 to 39.30 area on the S&P 500. Now, when we come up to the tick, it's pretty neutral. I'm not going to give it to either side of the market today, but there are some clues on the cumulative strength. Just like we showed you last week, this shift taking place, we still have a shift taking place here, which means that I do think there's a little bit more of a further pullback. Coming up to the sectors, everything's pretty flat, which tells us again that there's a battle for control taking place and confirms what we're seeing on the VOLD. When we combine all the evidence we have available to us with the fact that we're seeing a shift in control taking place, and we have confirmed on at least a 15-minute time frame and possibly even the hourly time frames that a downtrend might be starting at this point right here, we can pretty much say at this point that we're seeing some kind of pullback that started at this point right here off of the 40.56 zone. Now, again, what we're trying to figure out is how far are we going to pull back, because I do believe that this is a pullback. And then after we get to that target, where should we be looking next? And to answer those questions, we're going to jump over to our theories. Now, I'm going to start with the more bearish theory because I don't want to spend too much time on this one as of right now. It is still valid, but I think it's very unlikely. We're seeing a drop off in volume here, and we're still kind of climbing, which means that we could drop down from here, and we are still close to the 786 retracement. But I think if this was going to play out, we would have seen a very bearish sell-off already, and it would have been pretty quick after getting to this zone. So we're going to go away from this for a little while and move into the theory that I think is more valid at this point, and that's the three-wave movement to the upside, which is going to bring us to the 4,300 to 4,400 zone in the market. So as far as a pullback goes, there's a couple different targets I have here. The first, and I think the most likely at this point, is measuring the retracement from here to here. I'm thinking golden pocket right around 39.60. I think that's a very good possibility. And when we look at the 8 EMA, it's still pointed pretty much up, and the 21 is going to meet right around the golden pocket. So what would be the ideal situation is we come down, we violate the 8 EMA, we wick off of the 21, and we close above the 8 EMA. That would be pretty bullish. And when we look at the RSI is still above the moving average, and it has some room. And remember, we can violate it and even get a close below it. I don't like getting a close below it, but it's still possible. And then the next day come right back above it and then go for the run to the upside. So I think it's a pretty high probability. Now, the next two targets are one, 38.50, which is the one that we were calling out all of last week, and the more bearish scenario, which kind of is still in play because we hit this 100% extension up here, is that we come down to 36.65. Now, I think that's very unlikely, but I just want to keep the idea out there because it is possible. But either way, even if either of these targets are hit on the lower portion of this range, we're still looking up ultimately after the pullback. To answer the last portion of the question, which is after the pullback, where should we be looking? And I'm going to answer this as if we are pulling back to the golden pocket. Now, after we see that wick or close in this area, we should be looking for wave 3 of 2, and the 161.8 extension of 1 and 2 would be right around 4,200, 42.12 to be exact. that is where I am looking. Now this can change marginally based on where we exactly land. If it's a 0.5, 0.618, or 0.786. Either way, we're going to be ready. And at this point is where I'm going to be looking to get bullish on the market and take off my bearish positions. Now, if we blow past the 21 EMA and close below it, I'm probably going to keep the bearish positions on because it means that we're coming down to one of these lower targets most likely. The last thing we're going to do is just go over our tickers real quick. I want to start with Microsoft because they had earnings today. Remember, we said this looks corrective yesterday, and we've been saying that actually. And then we had a pullback, and we were looking at a potential ABC, and we told you guys two scenarios. Either we were going to play in this area, and it would possibly give you an entry signal starting tomorrow to go up after earnings, or earnings were going to be bullish, and we would get to the 100% extension in the 254 zone, and then that would be a shorting opportunity. Now this is the daily, so it doesn't show the after hours action, but I'm going to pull that up right now to show you exactly what happened. And it is exactly what we told you would happen. We got to the 100% extension and we rejected and are now coming down. Now I did day trade this in the after hours. I didn't put it in the chat room because I know most of you don't have access to after hours trading, but it was a very profitable trade. Unfortunately, unless you have access to after hours trading, we weren't able to take advantage of it. Now that doesn't mean tomorrow there won't be opportunity here. Remember, 241 is a very important level. We're trading below it now. So what I think could happen here is we drop a little bit more, get to the bottom of the Bollinger Band, not take out these lows, which is going to confuse a lot of people, and then get a back test of 241, then come down. That back test, as long as we're getting signs of a rejection, and look where the 8 EMA is on the 15 minute. Let's see where it is on the daily. It's still below it. So that rejection at this level, which would be a back test, is where you want to go short. Okay, let's move over to NVIDIA. And this was another very good example of a trade playing out here. We said that this confirmed to be a breakout yesterday, and then we should get a low volume pullback. What did we get today? Right to the level that we had mentioned in yesterday's video, right at 188, 187 area. And look at the volume. The pullback volume, look, there's our line that we had drawn yesterday. Pullback volume was perfect. Nice drop in volume, which means that this is bullish. Now, keep in mind, I did take a bullish position in this today. I got into some 190 calls. We are extended here. Now, this can still go parabolic from here. It can go irrational and just go crazy. But there is a potential we'll dance around here a little bit before going up, and I'm okay with that. The 8 EMA is pretty far. It does need some catch up, but the positioning is here. Now, will we violate this? I don't want to violate it. I want it to hold, and it looks like it wants to hold, but we got to see what happens tomorrow. Regardless, we do need to let this catch up a little bit. I'm hoping that we get maybe an inside bar tomorrow and then go, and I think that would be a more bullish outcome, because if we just go, we're not going to get as much momentum. If we get an inside bar and then go, let this catch up a little bit, it's going to go more explosive to the upside. Last, let's look at Tesla. Oh, we'll also look at Netflix. Tesla was actually pretty bullish today. We just got to be careful that this isn't a reversal pattern. Keep in mind earnings are tomorrow, so we'll see what happens. I think we might see a scenario similar to Microsoft tomorrow. And if earnings are bullish because we're running into it, and today we kind of stalled, I could see us popping up violently in the after hours, rejecting 166, and that would be a shorting opportunity. If you're not in already, I wouldn't touch this anymore because there's not enough room here to get in. And if we get the rejection in the after hours and we see something happen similar to Microsoft where we come up, tap the target, come down, and just die in the after hours, you're going to be trapped in your position most likely. So it's going to be a fun show to watch. If we open up at 166 on Friday, that is a shorting opportunity. So we'll keep an eye on this. Last is Netflix. And I'm thinking that this is probably going to come off the watch list for this week. We have exceeded the target a lot. Yes, we're extended, but it's running irrational. I don't want to get in front of a freight train, so I'm not going to trade this as of right now. I mean, there's better tickers out there to trade. We just showed you a few. So that's what I see in the watch list tickers. If you guys have any questions or requests, reach out to me and I will see you guys tomorrow.